Hello, everyone, and welcome to the March 2026 edition of the Economic Update by Kingdom Focus Financial. Today, we have myself, Derek Malden, and Michael Smith. Hope everyone's having a great kind of hopefully into winter. It's kind of been very cold in Pennsylvania, but we are actually right now in sunny Kissimmee, Florida for our annual Kingdom Advisors Conference, and we've sent out a few short videos and interviews with different people around the conference. But today we just wanted to give you a little update and overview of what the conference was about and a little bit of an economic update this month.
Absolutely. So I apologize. You're watching this probably. It's still a little chilly. We wore our spring colors just to help you get ready for what's coming, which is the warm weather and doing that. But Derek, we had a great time at this year's Kingdom Advisors Conference, and lots of reflection, lots of updates, some of which we want to share with you today. So thank you for taking the time to join us. And let's just dive right in. I think the first thing we want to talk about this month is that our outlook is still the same. If you watch January and February updates, you will have a good understanding that we have thrown a caution flag ahead for this year. There is a lot of volatility that we expect. And Derek, we heard a term from some of the market capital analysts and advisors, portfolio managers this week that I thought was interesting. And that was that we are in a
high-risk bull market.
High-risk bull market. I think we're always in a risk market, but I thought that was an interesting capture of what we expect. And it comes back to the things that we've talked about. We do see that all of the economic conditions are still favorable for a very good overall return. Current administration policies seem to be starting to play out and have an effect. As we've talked before, they need time to develop and see. The America First stance on some things is also changing revenue streams, and that's having a big impact. But the key factors in that can create a lot of volatility. One thing in particular, it's a midterm election year. We're going to continue to talk about that. We know for a fact that in midterm election years, the market tends to be really squirrely. And that's the caution flag, right? There's debris in the way and on the track. And so we've got to be careful because we want to be able to go fast, but we need to be able to hit the brakes when the time comes. And so far this year, we've had a really good first quarter.
Absolutely.
And what we're looking at. What are some of the other things that we're keeping an eye on this year?
Yeah, certainly GDP growth is one of them. Interest rate concerns and what may happen there. Geopolitical unrest in different places can always cause some challenges in the market. I think the overall consensus is, from all the experts we talked to here at the conference, they kind of felt the same way that we did. There's a lot of great economic factors, but there's a lot of unknowns. And so, we're expecting a good year, but as always, that could unfold with some of those things that may play out.
Yeah, you mentioned interest rates, and certainly along that line, we're watching what happens. A change is coming. The Fed chair will be shifting. There's already talk about who they think will be the candidate, but still to be determined, and then yet to be determined whether that person continues to do what they've done in the past, or they take that new role and
do something different.
Different. So there's a big unknown that we're watching closely there. You talked about GDP and growth numbers. Certainly our deficit is something that recently now with tariff revenue, big changes happening. And so those are some of the others. But unemployment and wage growth, meaning average wages increasing, is something we haven't heard about or seen in a while, but we're seeing that happen.
Yeah, and I hope that continues to play out. Another big one is housing. That was talked about a lot. There's continues to be a shortage of supply, and so therefore the housing prices are where they are. Right. But with any cycle, that can change in a heartbeat, right? So at some point, they're going to continue building houses, and supply will be way too much.
Yeah. And so what this means in our portfolios, and again, if you haven't, watch our January and February updates. Continue to watch throughout the year, because in years like this, we will make sector changes as the economy shifts through various legislative changes, through various economic changes. And so it's a year that is not just slow and steady as we go, but it's going to be rocky and choppy. And so we'll make and tweak adjustments as we move through the course of the year, from sector to sector, from risk on, risk off, as well in doing that. Another interesting thing, Derek, I'm interested in your take. I heard some very interesting comments related to precious metals, gold, silver, Bitcoin, and cryptocurrency. What was your takeaway from some of the thoughts on these leaders?
Yeah, all of them, they kind of had the same thought process. They do evaluations of companies, and people that are managing portfolios evaluate companies and investments and putting those together. And the way you evaluate those companies are through cash flow. What is their debt ratios? What is their price earnings ratio, which basically means what are you willing to pay per dollar for a dollar of earnings in the future? All of those metrics and many more. But with things like precious metals, Bitcoin, they don't have that. Okay, they're essentially just a thing. They're not a company that's producing cash flow. And so there's no real way to evaluate it. Their worth is whatever the next person is willing to buy it for. And so your guess is as good as the next person's guess, is as good as the next person's guess on how that's all going to play out. And so they do not put it in their portfolios that they're managing because there's too much risk involved. And a lot of people think those are safer investments at times. But I will tell you, the experts generally have the same consensus, is that no, that's not the case.
Yeah, and they're marketed very well to the average person, thinking there's a great opportunity you can make quickly.
Yep.
And I think Scripture, I'll go back to Scripture, which tells us that get-rich-quick schemes don't work.
No.
And so that's another caution flag that we have in conversations a lot with people, because this is something we hear or we're asked about regularly, is that precious metal and that cryptocurrency trade.
And I would add one thing to that. The get-rich-quick schemes actually do work, but for the sellers.
For the sellers.
Not the buyers. Yeah. Another great trend that we saw, which we've seen many years now in a row, is for the 10th year straight, biblically responsible investments have grown market share. And if you're not sure what that is or what that's about, please call in, and we're happy to talk about that. If you're not working with us, hopefully those of you that are working with us understand that that's something that's near and dear to our heart and something that we do in our portfolio selection process.
Absolutely. And I think that's a good place to wrap up for this month, is talking about those biblically aligned investments, the biblically responsible funds, because that not only is it a growing market size and share, as people of faith are stepping forward and reclaiming funds, redeeming those funds to make sure that they're investing in things that are aligned for a kingdom impact.
Yeah, and doing good stuff.
And it's just amazing to watch. I'm happy that that's part of what we do. That's a big piece of what we try to communicate to clients and walk them through. But it's very interesting in that they really broke down the myth 10 years in a row, but we're not trading off returns or values.
Right.
And seeing the numbers, and 10 years is a good data set, right, to have. And I think a lot of people still don't quite understand or follow that. However, I want that caution flag again, because something else that was brought out, and we were talking about it even before the conference, and it was talked about at the conference here, is while investors aren't necessarily seeing that value in jumping in, it's a slow growth. The mega companies are seeing that value, and so we're seeing an uptick in big players. I'm not mentioning any names on here, but big portfolio or fund manager players who are seeing their market share slip away to faith-aligned people who say, I want my money to do something well, knowing that they're not really doing research. They may not be attached to an advisor doing research. And so they're creating and labeling funds as Christian or as faith-based. And you and I dug into a couple of them, and we can help you find tools. But when you get into the weeds and look at them, they're labeling and marketing them as faith-based, but they're really not faith-based or doing anything different.
No, not at all.
So I want everyone to just be aware. A lot of, I'll say, wolves in sheep's clothing are coming to light, and big companies looking to grab those faith-based investors' portfolios. So while it's something that is important, we want to redeem money for the kingdom. We want to do well to reach our goals here in doing that. But we have to be very careful now, because there are people trying to shroud themselves and capture that market without actually living out those principles.
Yeah, they're marketing schemes to Christians who don't understand what it is, and without the proper tools or the understanding of how to vet investments to see what's under the hood of them, you may be doing harm when you're thinking that you're doing good, unfortunately, right now.
Yeah. So with that, I think we'll wrap up. Spring's coming. I mean, hopefully as you're watching this, you're seeing sunshine. And if not, just know that it's there. I hope our weather soon, where we're at in Pennsylvania at home, will look like this. We'll see flowers growing and trees blooming. But I also hope that as you continue to watch and learn and grow with us, that your outlook in general also continues to blossom and bloom and grow. As always, we appreciate you. Thank you for listening. I hope this month was helpful, and happy spring. Take care.